Hey, so for anyone that's joining us, this is Invest Beyond Multifamily. My name is Ash Patel. I'm with my two business partners, Arti Shah and Rinku Patel. We've been partners for a few years now, and we decided to record our weekly meetings and publish them for all of you to kind of see the inner workings of what goes on in a real estate partnership and a real estate investment company. So here it is. It is late October 2023, and we've got a few things to get through today. Can we start with our conference aftermath?
Sure.
All right. So for the listeners, we had a conference that we hosted here in Cincinnati. It was to expose people to commercial real estate, but really it was also to get our mastermind people together. We've had this mastermind for a few years now, and our community loves getting together. So we try to do these a couple times a year, but our goal was always to add as much value as we can. And I think the conference went fairly well. We ended up with about 70, 75 people total. We wanted 100. A lot of the people signed up very late. What are your thoughts?
Yeah, I think it went well overall. We had great property tours, which I think everyone really enjoyed. Did we get survey results from everyone?
Very few people filled out surveys.
Oh man.
So there's nothing. Um, we had one person who didn't like us. He wanted more. And the problem is, we have one day of classroom, which we have to balance between teaching the audience and entertaining them, but also having guest speakers do their keynote talks. So I think we over delivered on what the audience got out of the one day of classroom. And the next day we did property tours, which I don't think anybody does to the extent that we do. I mean, we had two buses that brought people, we drove a couple hundred miles that day and saw a flex building. We saw a mixed use building first. We saw a class A industrial flex building, an office building, and a straight industrial building. So I think that was incredible, but we can't please everyone, right?
No, but I think majority of the people loved it. They loved the bus tours because even, the drives were 45 minutes away. We got a lot of content out even while we were driving. I mean, Arthi and I had a great time kind of, we shared our backgrounds from how, we got involved in the real estate. And, a lot of them didn't know how we started and, all the projects that we've worked on. So it was kind of great to share that because some of them, as you know, they come from multifamily and, mobile home parks or, self storage and stuff. And they didn't realize what type of experience that we bring on.
Yeah, that's a good point. So next conference somewhere down south or southwest. I don't know that we do the speaking day. I think we just go straight into networking, property tours, hanging out.
They love Nate, by the way.
I know everyone loves Nate. This is Nate Barger for anybody listening. Um, Phenomenal speaker, motivator, just wants to make sure everyone around him levels up. So I think we'll definitely get a hold of that recording and try to publish that because that was great.
Yeah, he was awesome. It was really great. I
Yeah.
think then maybe we do a conference and then we call one a meetup, right? So I think the conference we should have full of content, and speakers. So once a year we do a true conference and once a year we do a real estate meetup,
What if we
potentially.
do the conference virtually and then do the meetup right after? Because my thought is, I don't want to have people sit through the conference if they've already heard us before. Now, granted, a lot of new content this year, um, but this way we can have a virtual option. There was a ton of people that couldn't come, so do it virtually, and then immediately after do the meetup. This avoids the whole sitting in a class, drinking coffee to stay awake thing. So
Also eliminates
virtual.
a lot of cost of hosting a full day of
Yeah.
conference room and hotel and meals, that we have to organize for large groups that, not too many restaurants want to do it nowadays. They don't want to host big groups. So it kind of helps us in that situation too, if we were to do a virtual conference.
Yeah, that's a good point. So it keeps people, away from their families for less time as well, right? Keeps their travel expenses down, keeps our conference expenses down. So hopefully the tickets are further reduced in price because that was most of the cost. The hotel was pretty expensive for the conference room, all the meals. Um, the buses were actually fairly inexpensive,
Mhm.
less than $3,000 for two 55 passenger buses. So yeah, I think, even if we do 2 days of property tours, 2 half days, right? Because this crowd doesn't, you got to wrangle them. They're all high achievers, which means they're a bit scatterbrained and don't like to be corralled. All right, cool. We got a lot to get through. Can I keep going?
Yeah,
Yeah,
one thing to follow up on that, 2 meetups or one?
Yeah, I think two for sure. And we got to show our West Coast people some love because they always fly in for our conferences. We got to go out there
Yep.
and our
So maybe
South.
one West Coast in the winter and then one East Coast in the fall.
Yeah, let's do that.
Okay,
I like it.
sounds great. All right.
All right. So something that's come up a lot amongst us, but also amongst all the mastermind people is looking for deals, spending time, going back to our roots, getting back to just what we do, like what started this all, looking for deals, right? So we were going to hold each other accountable every week on what we're doing to find deals. Mastermind people, especially the season 1 and 2 people, they're also in the same boat where they've gotten away from looking for deals, spending time looking for deals. And, during class, they were all galvanized and uh, eager to find deals. And some of them found great deals and they've kind of chilled, but they want more. So everybody, we're going to promote this in the class too, is everybody's got to go back to looking for deals. So back to our accountability. I found about a half dozen potentials that I'm going to have Gerna call, get some numbers, lease information. Um, I don't know if anything will come out of it, but that was an hour of searching, right? A half dozen potential phone calls that could turn into either deals or relationships. So every week, yes, we go back and back to the roots, back to the basics.
Yeah, I'm with you. I mean, I
Right.
think also just getting connected with our broker network.
Yeah.
Like I made some calls last week just to connect again. I'm like, it's been a while, we're still looking actively, and I think that really helps just kind of develop relationships. Hey, like we have liquidity, we're ready to close, we can close fast. And so, I think since then I've been getting deals. I mean, some of them have been just ridiculous cap rates, like 5%, 6%, which is not our cup of tea, obviously. But the other ones, I think there's potential if there's movement on the price.
Yeah, that's a good point. So let's go back to being top of mind for these brokers and good. By the way, that office building, 4-story office building that we were going to look at making it into co-working, the broker who I pissed off, if you remember, I couldn't get my earnest money back and I kind of forgot about it. So I all of a sudden remembered, call the broker. I'm like, hey man, like that's a $50,000 earnest check you guys owe me. And he's like, well, dude, the seller's not responsive to me. He's like, you can call the seller. So before I did this, I emailed this broker's email in his whole firm, all the senior people in his firm, emailed them, threatened to name them in a lawsuit if I didn't get my earnest money back. And the seller was again unresponsive to the broker. Broker gives me his number, so I call the seller, this Indian doctor, and as I'm talking, I said, "Hey, you've got $50,000 of my earnest money." And he stops me. He's like, "Hey, don't ever call me again. Talk to the broker," and hangs up. So I sent him a text message saying, "Hey, no problem. Just so you know, our contract calls for prevailing party gets lawyer fees paid for. So if we win a lawsuit, you're paying our lawyer fees." I said, "Happy to do it. Our lawyer's $400 an hour. We're going to start the lawsuit today." Within 20 minutes, I had the wire in my bank. But the broker, after this is all said and done, he's like, "Hey, Ash, man, I want to clarify one thing. If I didn't know better, it sounds like you were threatening me in your email that you sent to my entire company." And I'm like, "Oh, no. I mean, there's no mistake about it. I was threatening you, your entire company, everybody." And, long story short, he comes back and wants another offer. This is like a year later. He wants us to offer on that building again because it hasn't sold. So we went in with the same thing, 750 cash. I think they started at 1.8, came down to 1.2, and now they want offers.
That's so funny.
So
Good for you though, for
dude,
like pressing hard.
Offer them 500 and see what he says.
500,000.
Yeah, tell you, a year ago, we could have gotten this deal done at 750. It's still on the market. Now, in a year, things have changed. Interest rates have gone up. The cost of construction, as we're learning in the last 12 months, when we've done some upgrades and improvements and new construction, they've gone up. So you clearly know that we do have to spend some money on this property as is. So our price is now 500. If we want it, we can get the deal done.
Damn, I wish I was you.
Is he vacant?
Just think that,
Yeah.
put us on a group call, let's just do a setup call.
All right, I'll do that.
Especially if he's
Yeah,
fully
set up a
vacant.
call, say, hey, I'll have.
Yeah, they had an urgent care on the first floor, which again, the owner of the building was somebody who sets up urgent cares and sells them. So yeah, they had that, but they pulled that out as well. So it's got to be fully vacant, ideal location, plenty of parking, amazing building, once in a lifetime opportunity to buy this building for pennies on the dollar.
Yeah. So then Rinku was right on, right? They
Yeah,
pulled out
let's
the
do a call.
urgent care. Like you have nothing in that building anymore. So like you shouldn't go up on your value. It should be actually come down.
All right.
And last year we were having, I can't remember, I think it was 10 or 13,000 a month we were getting from the urgent care. So we were calculating as keeping them for the time being until we kind of renovate the second and the third level.
Yeah, and when buildings are vacant, especially going into winter, that's when problems occur.
Yep.
And he probably hasn't taken care of it because it's been on the market for a year. So
Yeah.
I mean, it's probably just going to be a total nightmare to take care of, which will be great though for us because that's where we'll pick it up cheap.
Yep.
So
All right. Well, they've got an offer on the table right now for 750 cash. Let's see what they do. If they come back at 900, then we get on the call and offer them 5.
yeah, exactly. So you could have had us at 750.
All right. Or we go in, look, if we get it under contract at 750, we go in,
And retrade it.
we find all the equipment old. I know the windows, the seals are broken on a lot of them. Who knows what the roof is like? They just go in, lock it up, and retrade it. All right. Next on the list.
For flex. So we had a flex contract for a piece of land that was under contract. We were under contract for 375, right, Rinku? Right. And we were all set to build a steel building on it, right? So the city said that they won't provide us a variance. So they want us to put a brick, like outer brick or concrete or the Harvey board, which just pretty much all doubles the price of just doing a steel structure. We tried to lower the land price to kind of mitigate it. The sellers won't do that. So we are going to pull out of this contract for this piece of land. I think there's a couple of issues that Rinku and I have discovered with talking to the broker and talking to the guy who helped us with the engineering plan is that this city is just going to make it harder for us. So right now they're saying that exterior needs to be X, but going forward, we might have to like overdo the landscaping. We may have to, ensure our signage is top notch, right? And I mean, we're just pouring money in without getting like the rents, right? We're in the back, we're not front retail. And we're spending front retail type of money. So I think, I think we're on the path forward to just pull out of this land. Wanted to kind of update you, Ash, on this too.
Yeah, Rinku and I spoke, and my thought was, if we've got to put the money in, why not go big? Like, let's go super high end. But her thought was that area doesn't command those types of rents. Yeah, so if the city isn't welcoming, then let's move on, right? I mean, this reminds me of these towns that I've tried to do deals in, egotistical as hell. They think everybody wants to be in their town. And maybe that's the case here, but just, I mean, be welcoming and, try to encourage businesses to come in there and build. The fact that they wanted even the back and the sides of the facade to be bricked is stupid, right? Especially when you have somebody willing to compromise, bring a lot of tax revenue into your town. So,
Exactly. And like the OM, I sent you guys an offering memorandum this morning, right? It's in the same part of town. It's already built, and I can buy that as is for less than how much it's going to cost me to build new without the headaches. It's already a structure,
Yep.
right?
is
Wouldn't
it,
that be better?
yeah, how's
Right?
the facade?
It's just a steel
All
system.
metals. Yeah.
Okay, so that's grandfathered in.
Yep.
Mhm.
Yeah. Is it worth buying?
I need
Looks
to look
like
in.
it's got 3 buildings, is what I noticed. So it's 3 separate buildings is how I look at it. There's one building off to the left of it, if you look at that OM, and then there's a kind of like an L shape. So I'm looking at it as just 3 buildings.
Is there room to build more?
Don't know until we see it because I think it's just a parking lot in the right side of that building, the L-shaped building.
Okay.
Yeah, but you're getting like 1.78 acres. You're getting 26,000 square feet. 22,000 is warehouse, right? 4,000 is office. It's already built. I don't know if it's revenue generating. They don't state that here. But if you're going to buy at the same price as building new and it already has some income coming with it, it's a no-brainer.
Yeah.
Right?
Yeah.
So
it's not far from our current office building right now that we have. So it's literally probably, I want to say about less than a mile.
Okay.
So we'll look at it. I'll get you guys more information. I just got it yesterday from my broker. This was my broker connect from last week. So.
Okay.
Okay.
What else?
What else do we have?
We've got the other one, the land with Chris that we were looking at to do that. That gets rezoned today, actually, to have a not sort of metal. They're still gonna, the city here is still gonna require to do some sort of, brick, stone kind of look, but not have a complete metal buildings allowed in that area.
And he's in good with the city, right, Chris? So he can get us as much flexibility as they're willing to give.
Exactly, yeah.
And the other thing is, even if you're doing stone where Rinku's talking about, you can get the rents there, right? We weren't able to get the same rents by putting in the nicer facade.
Yeah.
So overall, I think that's going to be a good bet for us. And if we somehow take down this property that was just sent by the broker and Chris's, that's truly a flex fund that we can start. Because the flex, I think both of them will be about 2 point something plus. So I think it'll be a good deal.
And then what happens if you have a flex fund?
So there's a couple things. First, everyone right now is crazy about flex, right? The interest level's high. The second thing about having the flex fund is it will allow us to keep on rolling investments to future flex type of opportunities. So if you look at like funds that are out there, you have multifamily funds, you have industrial funds, you have office funds, like there's plenty, but like having a secluded flex fund will give us the opportunity to target our investments and will be attractive to an investor, because in the market right now, everyone wants to get in. And a lot of people don't have the entry into it. So this will give them like kind of a LP investment into something like this.
Yeah, that's a good point. Everybody wants to diversify their investments. So yeah.
And the nice thing about Flex right now is there's value on the upsell, right? Like the value is, it doesn't like really go down, right? Because you can take cheaper rents, and in a market where there's a recession or any sort of adjustments to the economy, everyone's willing to say, hey, if I can put my office building in something that's $13 a square foot versus something that, you know, my workspace in 13 versus something that's 20, they're going to take that flex, right? That's the beauty of flex, right? They don't need to take that $22 retail space.
So give you an example, the land that we were talking about with Chris. I know you guys saw that public storage or that compass storage that was being built. That storage space is now open, and 300 square feet in that storage space is $450 a month.
It's crazy.
Damn.
Yeah, so I mean, we have a flex building. You know, the rents are decent where we would be able to get those numbers in that particular area.
So $18 a square foot.
Yeah.
All right.
Also, what does that say even about our retail that's currently at $18 a square foot right next door?
That's a problem. It's a good problem.
That means those leases need to end now, really quick.
After that, I got an email from one of the tenants or a message from a broker about one of the businesses that they're trying to work with something, and they want to get on a call with me today. So I have a feeling that, and I think this is one of the tenants that we had not really an issue with, but I guess, you know, wanted some type of a break on their rent when we first purchased this building. I have a feeling they're trying to list their business, and the broker wants to talk to me. There needs to be transfer of what or anything like that.
Interesting. So they're going to try to get concessions out of you?
No, they're not gonna get a concession. They're trying to, I think, so it's a broker, right, that wants to get some details from me.
Okay.
I think so. They're trying to see this lease, if we would allow this lease to transfer or whatever, or, you know, along those lines is what I'm thinking.
Got it. So yeah, of course, the lease transfers. And is this one of the tenants that don't have renewal?
They don't have renewal, but why would we transfer? We need to approve that tenant first of all.
Correct, 100%. But we can't stop them from transferring it if it's reasonable. If so here's what we can do. Yes, by all means, we can disallow the transfer if the tenant's credit isn't there. A hybrid solution is we allow the transfer, but we don't let the original tenants off the hook. Right. So now we have two people on the guarantees, the new tenant and the old tenant.
Well, here's the thing, is they're gonna ask me, one is, are we gonna allow it to transfer? Two, that lease comes up for renewal in 2.5 years. Am I gonna renew that? And can I build another renewal in, which is gonna be, I will build it. It's gonna be at a market, whatever the market is. And the market tends to be right now is $25. By 2.5 years, it might be $27, $28. So I'll indicate that, right?
Yeah. And give them the example of the flex building next door at 18.
Yep.
So I think all these leases have a clause that says we won't unreasonably withhold their sale, whatever, right?
Yeah, absolutely. Absolutely. We won't.
Yeah.
But they can't just bring somebody off the street and say, we're gonna transfer it to them. Their financial have to check out, right?
Yes, agree. Also, look, when we interview tenants and we're like, hey, are you guys going to renew? Your lease is up in 2 years. Often they'll just be like, yeah, we'll let you know when the time is ready. So be vague about it if it's beneficial, right? Are you going to renew? Yeah, look, love to have you here, but it's going to be at market rates. Or we have to gauge where the market is at the time.
Right.
Right? Just be vague. Because half of the tenants aren't going to tell you early if they're going to renew or not. Just, yeah, leave it open ended. Now, let's think this through a little bit more. They're potentially selling their business. If they have to relocate in 2 years, there's a lot of loss in value because their customers are used to going there. So is it beneficial to renew early? And are they going to be willing to pay $26 a square foot? Probably not. Is it beneficial? Yeah, maybe. Yes, right? Lock them in
I mean,
early.
it would be beneficial for them. How I see it is, they're spread out so much in the 6,000 square feet that they do have. Think if they went down to like 2,000 or 3,000 square feet and not have an end cap space, have like a middle of space, then that would be beneficial because then we can look at someone else, bringing somebody else in.
Yeah. I don't see a reason to be overly enthusiastic one way or another. Have the conversation. We know that they're probably not going to pay the amount of rent that they're supposed to. So is what it is, right?
Yep.
All right. What else?
How are you feeling about your last season of Mastermind, Ash?
A little bit liberated. um, so for anyone in the audience that doesn't know, started a mastermind in 2020, not really by choice. People kind of encouraged me to do it. We've done 3 seasons, just started the 4th season now. We take 20 students each time. I don't know, man. I think we've got a great group. Jaden's idea was to do a course where you just kind of, record the content, put it out there. But then what do you do for deal reviews? Because I don't want to put somebody that had just taken a course and put them in our deal reviews with these killers. So, I don't know if we do that, we may have to do a separate deal review for course people, and if they level up, maybe promote them to the big group. But so the cool thing about the mastermind is we ask people, do they want another 100 people in there? And nobody said yes. They're like, man, we've got a great thing going. It's a small group. We know everybody. Let's just keep it the way it is. So
No,
I
I
feel
think
good
it's
about it.
yeah, it's a good group. Well, congrats on your last season. I think
Well,
I wish we
thank
could have
you.
made a bigger announcement about it. I wanted to like blow that thing up at the conference if I would have known.
I
Um,
know, man. I didn't
you know,
really. It was a last minute decision. Um, I didn't give it a lot of forethought, but
it's
it's cool. And look, here's the benefit: is every one of us, including us, we get to level up by watching everybody else's deals, right? I mean, with the people that we have, they're doing all kinds of incredible deals that I would have probably bypassed several of them. So it pushes everybody.
yeah, no, I think it's awesome. And I think the group is perfect. And the quality of the people in the group is outstanding, right?
Yeah.
Like that's like we haven't sacrificed quality, especially with your content. I think if you do the course, I wouldn't even do a deal review with it. It's just a course. Listen, and if you want, maybe later on you do an add-on for, one-on-one deal review, and you can make it a thing. But I wouldn't don't over like I think the deal review right now is a good size too, and it can get pretty intense and pretty long of a night
Yeah.
sometimes,
Yeah.
and the week of the night.
Yeah. And,
Um,
so maybe giving them access to view only, because I mean,
yep.
we've got hundreds of deal reviews that we've done. And that's certainly enough to educate them more. Yeah. I'm not overthinking this. So
Yeah, no, that's awesome. Congrats.
thank you. Thank you.
Okay. I'm sure the family will be happy to have you back on Tuesday
I know.
nights.
My wife last night, Topeka, she's like, "Hey, so Tuesday, tomorrow, like, did you start your new class thing up?" I'm like, "Yep." She's like, "Ah, okay." Knowing like you're not going to see me on Tuesdays anymore.
Yeah. Well, it was a long run. So
Yeah.
what else do we have? So we have deals and then accountability on our new deals. So we'll report back next week, but I guess we'll all just keep in touch this week because we need to get these deals moving.
Yeah. Just need to fill our pipeline, right?
Yep.
Yeah.
And the deals are out there, man. We've got students finding great deals. They're out there and they're getting better. Sellers are finally come to grips that Their property's not worth what it was, and it's not going to sell for what they think. Rates are continuing to go up. So I think we'll see more and more deals coming to the market. And brokers are getting hungry again, right? Because the buy sale volumes dried up,
Yep.
which is great. You know, a very simple example of a gauge of the economy is when you go to Home Depot or Lowe's. During booming times, you can't get an associate to ask a question to. Now, and similar to 2008, when you walk in there, there's like 4 or 5 people that'll ask you, do you need help? Did you find everything you needed? Right? Because no one's, I mean, everything's drying up. Any small business owner that I know, um, they said months and months ago, the spigot's turned off. People are just not spending money.
Oh, yeah, businesses are down about at least 15-20%. I can tell you all the way across all of our businesses, we're down 15-20%.
Yeah. It's an opportunity, right? We get roughly 4 big crashes or pullbacks in our lifetime. So we had 99, the dot-com bubble, which none of us had any money. Rinku, you're probably, or both of you, probably in high school. Um, and then 2008 recession, again, I don't think we really had any money. And now whatever recession we're going into is our opportunity to capitalize. And then we may have one more where we still have enough courage to make some risks, take some risks in the market. And that's it. So everybody gets roughly 4 big buying opportunities. The first 2, you don't really have money. And the next 2, it's do or die. Right? I mean,
do you think that, I mean, I don't think we've hit the bottom. I think it's about 6 months out before we hit this bottom. I think we're going to see a lot more deals when people, because a lot of these commercial deals are 5-year financing, right? And they're all, they were all locking in at, like, they got the best prices, up in 2019, 2018, right? It's similar to multifamily, right? Like, every multifamily call I've gotten this week has been all about, hey, I need to get a rate cap to extend my interest rate 2 more years. I'm going to pay 1.2 million for that rate cap. I'm like, are you kidding me? Like 1.2 million for
and
a
how
rate
much was
cap?
that rate cap 2 years ago?
Oh, like 200,000,
If that,
right?
yeah. Like probably
Um,
30,000. Yeah. Something
like,
stupid.
just ridiculous. And no one was buying it, right? Like, no one
Yeah.
cared about rate caps back then, but now they will be completely underwater. And here's the craziest part. You spend 1.2 to buy the rate cap, but you still need to adjust, because you kind of have to do a new round of financing in a way when you do the rate cap, because there's an equity play that needs to be, because you're kind of re-leveraging a little bit of it. So
Explain
if
that,
you're,
please.
yeah, so if you're like underwater, which when you're doing a rate cap, so let me tell you, a rate cap. A rate cap is something that locks in your rate, either the rate you have for an extra 2 years, or gives you a little bit of a bump, but not the bump that you would get if you had to completely do a new round of financing, right? But at the same time, they kind of assess your books again when they do a rate cap. So if they feel like they need a little bit more equity in the game to approve the rate cap, they're gonna make you put a little bit more into this on the
Oh,
equity side.
I didn't know that.
So some, like, it just depends on the bank. So one of the guys is like, I need not only the money to cover my rate cap, but I need a little bit more money to get into the equity game. Because I don't have a good, like, debt to coverage ratio. So it's a pretty shitty. So now he's looking for, check this out, 1.2 is a rate cap, another 2 million coverage to stay in this multifamily deal.
And do you know how big the deal was at purchase? Like
I
15
think
million, 20
it was a
million?
$50 million deal. Yeah, it was $50 million deal when he bought it. And if he sells it now, he'll lose 30%.
And that's happening across the board. There was a very famous syndicator on the West Coast that is in the same boat, but the guy's a marketing whiz. So the way he pitched this raise was, hey, we're taking on newer debt for this property. It's the safest debt to recapitalize our investors, but you're getting promoted ahead of them. And it's like, okay, just come out and say, we need a rate cap, we need additional liquidity, and this is what we're offering. But he's got all these crazy marketing phrases, the safest debt, the most preferred debt, the least risk. And it's like, oh my God, man. And I bet a lot of people will follow suit, right? If it works
It is.
for him, they'll just do the same thing. They'll raise money to recapitalize their deals and further get investors in trouble.
Yeah, and the crazy thing is like they can't pay out pref A, they can't pay out pref B, right? They can't pay out the B shares or the A shares. So like what are these like above shares? Like they're like A1 and A, like I mean, how do you put someone even above a A share, like your preferred A shareholders? Like it's just I don't even know what they're doing.
I think it's an act of desperation to save the deal, right? Because unless they do a cash call from their existing investors, and my guess is it's a substantial amount of cash, so it's not feasible. This is their only option. Go out and raise more money.
Yeah, and so I spoke with a multifamily guy last week, and he's thinking about doing a cash call, right? And literally, if he does a cash call, he's going to lose all the faith of his investors, right? Because he hasn't done distributions for the last year, and now you haven't done distributions, and you're asking me for more cash. So the guy I know is part of the GP, but he just because he was a bigger investor, he's like, go ahead and do the cash call, let everyone get diluted, and then I'm just going to swoop in. So like cash is king right now because all of these guys who are hustling and not going to be able to get the capital are going to get diluted, right?
Yeah. And we talked about this, but there's companies out there that have so much liquidity, and that's what they're doing. They're swooping in, not when they're ready to be foreclosed on, but when it's time to recapitalize the deal and there's no other options on the table. These companies are coming in and getting a huge percentage of the deal just by
Mhm.
bringing in emergency cash. So yeah,
So
you're
the
right.
deal,
Cash is king.
so the deal I structured for this guy that I consult for is 15% interest rate, right? For like per year, then 50% of the GP, right? And then if you default, then 1% interest rate every month of default plus 100% of GP in another deal. Like any deal of your choice. I get to see your whole portfolio.
So 15% interest
Yep.
for every month they're unable to pay. It's one
Yep.
point up,
Yep.
and 50% of the GP, which we're assuming is 30% of the deal. Is it a
Yeah, but I
30-70
don't want
split?
I don't want the GP in your deal that's dying. I'm gonna take the GP on all your whole stack. And I'm gonna pick the deal I like the most and
And
take
then
that
you
percent of
take
that.
over the
Yep.
entire.
Yeah. And if you don't
Wow.
pay me after 4 months, I take over 100%. So
Damn.
that's but I'm bringing 2 million to the table, right? So like 2 million right now is huge in this market.
I would have thought you're bringing 20 million. So 2 million can have that much leverage.
That much leverage. Yeah.
Wow.
Because they need it in 60 days. Where are you going to find 2 million without like literally getting your knees broken? You know.
Man, if our company wasn't called Invest Beyond Multifamily, I'd say let's do the same thing. But I don't have any interest in buying apartments, and I don't see that they're going to turn around anytime soon, right? They've had such a run. So back to the original question on thoughts on the economy. The longest we've gone from when the Fed started increasing rates to when they started decreasing was right around 3 years. But we've never had a bull run this long, right? We're going on, 15 years since the 2008 crash. So, at least a dozen years of prosperous times, which is longer than any other time in history. So, my guess is we're going to be in this for at least 3 years, if not longer, for
It's going to
whatever
be a
that's
tough
worth,
one.
right? Yeah. Yeah. Well, and there's no soft landing. I don't
Yeah.
understand. You read the journal, watch all these news programs, and they're like, oh, so we actually might be in for a soft landing. When have we ever had a soft landing on any recession? None. It doesn't happen. So it's brainwashing. It's the media outlets brainwashing people. So stupid. Soft
Yeah.
landing.
No, I'm with you. So I think right now we conserve our cash, we find the right deals. We keep money in our accounts for working capital in case we can't get rent 1 month, right?
Yeah.
This is the last thing we're ever going to do is try to call capital. I mean, I think you really lose the faith of your investor base, you know, if you're not giving distributions and you're calling capital. So
You and I, and I'm sure Rinku, think that. However, I can't tell you how many multifamily syndicators I've talked to, and they're like, yeah, no, like we're not doing preps, but like no one's doing it. So our investors are used to that. And I'm like, what? Like, just because everyone else is pausing their distributions, you think investors are okay with it? Well, yeah, the whole market's like that. Like they understand that.
No, they
Oh
don't.
my God. Hell no, they don't. This was hard earned money that somebody, had a decision to make with their spouse. And do we invest $100,000 into this deal? It's a big deal to a lot of people. And, not okay to disregard your investors' money and just say, well, it's the whole market. It's not my fault. We never
yeah.
knew interest rates were going to go up. Really? We did. We've been talking about it for years. We didn't know when, but we knew they were going up.
Yeah, so we're gonna see a lot of this. I mean, I think the other thing I'm seeing a lot of is people getting in the get rich kind of quick deals that they go into a partnership with someone and they don't know their partner and the partner has more money than them and they're just squeezing them out. Like I have a deal right now that I'm working with on my own and put 100 grand in someone who had self-storage, right? And in a place where there's a moratorium, like you can literally not build any more self-storage in the state. So you cannot go wrong, right? Like
Yeah.
it was 10% interest per year, fine, help you out, buddy. Got into a partnership. The partner has infinitely more money than them. So they were just like, we're just gonna, boil you down in litigation and have fun. Like, we'll just keep on suing you. Even if you win this, we'll sue you again. So we're gonna break you in litigation. And so now this settlement is like, we'll just get your money back. We'll give your money back over 4 years. No interest, like nothing. Like, I mean,
Damn.
that's like, so the people are just out there got into deals thinking they're going to get rich quick schemes, and how do you screw that deal up? Like, there's no
Right.
way to screw that up. So, I mean, it's a crazy market out there.
Yeah. It just makes it harder for everybody when there's bad operators that disregard people's investments.
For
Not
sure.
bad operators, but operators that disregard or don't hold their investor capital in a very high regard. Awesome. Until next week.
Until next week.
All right, ladies. Thank you.
Take care.
Bye.
Bye.